Hey traders, welcome to the top tier outlook for the week of July 1st. We're going into the first week of the quarter, the first week of the month, and it is a shortened week, but it is absolutely jam-packed with a lot going on. So before we jump into the open here, let's talk about what we have going on the calendar. So of course we have the 4th of July bank holiday on Thursday, which is going to make for a very quirky run up into non-farm payroll. So remember, this is what we've got coming up. So kicking it off on Monday, keep an eye on these hot zones, right? We've got on Monday, ISM manufacturing PMI. Now that particular hot zone lands in more of the inflation. If we think about little buckets of macroeconomic importance, number one is inflation, number two is employment, and a distant third is growth. Now, this is going to be an inflation metric, not as important as PCE or CPI, but it does say a lot about expansion and contraction of, just business, right? I mean, think about it. What is an ISM manufacturing PMI telling us? Now, if you read this, a level of diffusion index based on, blah, blah, blah. What we want to know is whether or not it's going to remain below 50. And this is going to be pretty important because if the economic health via the lens of ISM manufacturing and later on this week, ISM services shows that it's pretty flat, and especially manufacturing staying below 50, the argument that can be made is that the Federal Reserve keeping rates higher for longer is hurting the economy. And this ISM is one way to measure that. Anything that is suggesting that the higher for longer track that we are still on is actually causing more harm than helping the Fed get to its inflation target, which, by the way, with the data that we got last week, the month over month being in line or cooler, year over year being in line or cooler, this is not an inflation number from last week that would have the Federal Reserve thinking anything but we're getting ready to that point in time where we need to cut rates. And whether or not it'll be September is really what's on the table. Now, that's just Monday. Rolling into Tuesday, we hear from Powell himself. He's going to be on a European Central Bank panel and, talking about whatever it is central bankers do when they get together. After that, we're going to get the JOLTS number. So there are two main numbers that are really important in terms of the jobs. Now, why are jobs important? Because the Federal Reserve said so. Because it's a dual mandate that they have. Inflation's number one, jobs are number two. So JOLTS and non-farm payroll are going to tell us not only about the job openings, but how many new jobs are created in the last 30 days. So that's coming up on Friday, by the way. Moving on into Wednesday, we get the services PMI, which is not as big a deal as the manufacturing, but they're both important metrics. We get the ADP. We get FOMC meeting minutes, right? The hits just keep on coming. So we get to read, kind of like being the fly on a wall. Where is there consensus? Where are certain members still not favoring rate cuts? We get a little bit of insight into that. But believe me, these meeting minutes are far more curated than the real discussion, but we'll get a little bit of insight there. And then boom, here comes NFP. And it's really three main headline numbers. One is how many new jobs have we created. Two is whether or not we're still seeing inflation or flattening in the average hourly earnings. And three is the unemployment rate. So all three of those hit at once, and they can offset each other, right? So for rate cuts to still be the primary expectation, that non-farm payroll data needs to show that there aren't as many new jobs being created, or that the unemployment rate has ticked up. Because again, since the Federal Reserve has that dual mandate, that will be something to watch. So going into all this data, jumping on over to the CME FedWatch graphs is going to be really important. And this is where we can start to measure whether or not each one of those data releases actually increased or decreased probabilities for September, November, and December rate cuts. So we want to keep that in mind. We can measure all this, right? I'm not really that concerned about what the print for ISM or the print for non-farm or JOLTS really is. I want to know what time they're released. And yeah, we want to know what the data is, but far more important is whether or not it's being perceived as something that would increase the likelihood of a rate cut. And last week's inflation data, just by a little bit, did increase that. Not by much, but by a little bit. So it certainly didn't get traders thinking the Federal Reserve would be holding for longer. Just we're not sure if September is really on the table. By the way, why am I skipping over July? Because we are not going to see any kind of rate movement in July. That's been this way for a while. There's only negligible expectation for a rate cut in July. It would have to take some real dramatics, terrible job openings, terrible non-farm to even get that budging off that 12 and change percent. All right, so that's your macroeconomic breakdown. So let's go take a look at how we are opening this morning. Well, I should say in Asia. How is the Asian session looking? Now, going into Friday's end of quarter, I did set up quite a few buys. I think I set up something north of 7 or 8 setups. I took 3, and all 3 of those, we'll see, for better or for worse, we're focused on the pullback in tech, the profit taking in Q2, and then leading into my expectation that we could continue the trend in Q3. Now, the 2 rebounds that were most impressive after the bell on Friday and into the 5 p.m. Eastern close, so after Wall Street, after the cash close, were Dow and Russell. So the Dow and Russell had a really good rebound after 4 p.m. And both of those are opening. I believe the Russell is opening above the previous session close. I don't believe the Dow is, but it's awful close. So kind of a flat open, which is a little disappointing. But look, we're nowhere near 9:30 tomorrow. So I'll be much more interested to see what happens going into about the window between midnight Eastern, which is really that would be about 3 to 4 hours into the Asian session. What's the Asian session? We're talking about Auckland, Sydney, Hong Kong, Tokyo, Singapore. So by about 2 to 3 a.m. Eastern Monday morning, we'll start to see what Europe and London thinks. By 7 a.m., I'd like to see that the S&P, NAS, Dow, Russell are a little bit more supported, that the buying interest is coming into Q3, especially in those sectors that have been so strong. Look, is this it for semiconductors? Of course not. There's still a lot of strength here, but we saw some profit taking the latter half of the month. Is this it for Apple or technology? I don't believe so. Again, really strong quarter, actually really strong June, and then some profit taking. So I'm not abandoning the NASDAQ. It's not as if we're seeing any significant weakness that would suggest even a break of the uptrend. We're just not as strong as we were, say, late May, early June, but I would look for that to resume. Again, maybe not necessarily punching up to higher highs in quite the pace we saw in June, but certainly more bullishness. And please remember this, and I've been thinking about this a lot and talking about this a lot with the members. Remember that in terms of we're traders, right? In fact, let's even add a few more descriptors. We're retail. I'm not confusing myself for a hedge fund, right? We're retail, active, self-directed traders, right? We're all 4 of those things: retail, active, self-directed traders. What does that mean? Well, I'm not trading for a hedge fund. I'm not managing money. I'm active, which is to say I'm not looking to buy and hold. I don't care what's going to happen in 2026. Really, I mean, nothing I'm putting on now has any bearing on what's going to happen in September, right? We're going to be trading for an outlook of a few hours to a few days to maybe a few weeks. And what happens is on television, no one really talks about their time horizon, right? No one overtly says this position is something I'm going to keep for weeks or years. It's made to sound very, well, uncertain. It's very kind of ominous because no one wants to be pinned down to their position succeeding or not. That said, we have to, right? We have a short-term time frame. It's usually weeks at most. So when we're talking about what could happen in October, November, December, does that really matter? It probably doesn't. We just want to know if the trend is going to be up for the next couple of days. So we can buy low, sell high, or buy high and sell higher. And that might be a 3 to 5 day window. So this is where we always got to remember what is our time frame and time horizon. And even though macroeconomics are a far longer time horizon, the data along the way creates a lot of the volatility that you and I have to deal with. So keep that in mind. As far as fast forwarding to a question on, say, elections, I really don't care. Yes, there could be some volatility based on whatever is happening, but at the same time, elections are usually bullish. And I don't think Apple sells off because of something happening with the election, right? So I don't put politics into this at all. Yes, there are certain sectors, right? Normally, they're really small niche type sectors. There are certain sectors that might benefit from one party or the other, right? But that's not just at the top of the food chain at the White House. That's going to be also on the congressional side. So again, elections and politics just have really no place in trading. And even longer term implications often are just, we're trading expectations, aren't we? That's all we're trading. We're trading what do people think right now that would lead them to be buyers or sellers of something for the next few hours, few days, or for a few weeks. And I think the more we forget that we're nimble, we're getting out pretty actively, we get caught up in these big narratives that, that clearly the television wants to see riveted to so they can show us their advertisers. Okay. That being said, get those questions in early. And if you want to check out more of what we're doing in the Sector Secrets Mastery, what kind of trades we were putting on at the end of Q2, how are we preparing for Q3, come check out what we're doing over at sectorsecrets.com. All right. So Big Chip, I don't think, again, I've never, ever traded solely because of an election. Now, that said, if one, for example, right, I don't want to be ignorant of it either, but remember, we still have to have trends and the setup available to us. So let's say one side or the other is favoring a certain kind of infrastructure spending. Maybe that's part of what they're running on. Yes, certain stocks and certain sectors might benefit from that, but they have to show a setup, right, before we even get in. So there'll be things like that, right? Could certain commodities benefit? Sure. Could certain sectors and industries benefit? Sure. But as far as the broader averages, as far as semiconductors and tech and financials and healthcare, they're not going to be swayed. They're just not. Either the trend is there or it's not. So I would say no. I really try not to let, because there's so much emotion around that topic. I try not to let that really be a factor, because if it is a factor, I'm going to see it in price. I'm going to see it in volume. I'm going to see it in structure. So even if we are unaware of all the information, which, by the way, we always are, there's no possible way to be aware of every little bit of input that's moving a market. I know that the chart's going to show me. So I don't even have to know that that's the news or the data or the expectation. The chart's going to respond in kind. So that's always been the way I look at it. All right. Emmanuel says, did the Russell rebalancing influence Friday's 4 p.m. Market on close? Look, both Dow and Russell benefited almost very similarly to the last hour of the futures market, meaning once Wall Street closed, the futures are trading for another hour. Both of them did seem to benefit quite a bit from that. Did the rebalancing make a big difference? It might have affected more the individual holdings. Like there's a question here on SMCI. If you take a look at SMCI, again, rebalancing to me is the same thing as any bit of news or information. How is it being responded to? So, yeah, I'm not going to say it didn't, but I don't believe it was a setup. I think that's the bottom line. I don't believe there was a setup there based on any of that. Are there any signs of sector rotation? That's done, Emmanuel. So sector rotation would have been a window of about mid-June to the end of June. Now we're starting off with a fresh month. And it's the same thing that we've been talking about in Charts and Coffee. If there is any rotation, it might be mildly in healthcare, regional banks, and likely a handful of energy stocks, maybe a handful of energy stocks. So let's talk about financials. This thing is still a dumpster fire, Chris. Yeah, financials don't look good. Now, when we start talking about earnings, because my gosh, is it ever not earnings season? Sometimes it just feels like we're either finishing earnings season or going right back into it. So we don't really have a lot of trends going into earnings, but there are two stocks in the XLF, three maybe, that are worth keeping an eye on. JP Morgan, Bank of America, and Citi. Those are the only three. Financials are not looking great going into earnings. So if there's a rally into earnings or a setup into earnings, I'm not really seeing it. And I haven't really been, in fact, Chris, Financials, as a general rule, have been on my do not swing trade list. I'm okay to day trade them, but I haven't been swing trading them. And frankly, there's just been better follow through and a handful of other sectors out there, a handful of other stocks. So I don't see signs of that. It certainly could, but it's not moving. Like, for example, what does a run into earnings look like? It looks like what we saw in Q1. See that up, 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 up. There's your earnings. So I don't see the same kind of clarity because I prefer to trade a run into earnings when we're actually running, when there's actually a rally, when there's actually even better, maybe a trend. So I'm not gonna hitch my market to that wagon. All right. Next up is there a senior citizens? Oh, I have no idea, Daniel. We have trials, we have sales. I don't know about that, to be quite frank. You can definitely give the office a call and ask. I actually don't know. Thank you for the question, though. That's a great question. I really don't know. All right, let's go take a look at what's going on in the S&P and the NAS. Markets have been open now for about 17 whopping minutes. Pretty flat so far. So I don't see a big gap down. I don't see a big gap up. So right now, early part of the Asian session, not a lot of engagement. I would have loved to have seen a little bit more strength, especially as we're starting off a new quarter, but we're not seeing much of anything. It's pretty flat. You can see here we're down 0.04. We're down 0.4 from Friday's close in the NASDAQ. So flat as a pancake, really. And we're flat. I mean, we're unched 0 on ES. Really too soon to tell. But if there was going to be a gap, now is when we'd see it, right? Now is when we'd see it as we go from Friday's close to Sunday's open. And I'm not really seeing that major. I'm not seeing any kind of major move there. The two that I would be curious most about as far as strength would be the Dow, which is already pulling back some, and the aforementioned Russell, which is actually still pretty strong. And a lot of this is going to be, when we talked about sector rotation briefly, when Iman asked, KRE had an unbelievable surge right into the end of the quarter. Friday was a huge up day for KRE. So if this is going to last, right, one up day, one green candle does not make a trend, but it sure does scare the heck out of sellers. And part of bullishness, right, is when sellers have to cover their shorts. What's the mechanics behind that? They got to buy. So there's a bullish move when someone has to cover a short because they got to buy it back. So it doesn't mean that's a net long for them, but shorts are being closed, longs are being engaged. Let's see if the KRE can do two things. One, remain printing green candles, and two, make a good serious run at 50. That would be a pretty important level to overcome, getting through that 50 level. So KRE is surging. Financials are still a mess. Healthcare is kind of a stealthy, bullish environment where healthcare itself is not really wowing me. But there are a number of stocks within healthcare. Lilly, of course, which has just been a steady uptrend. AbbVie, which has been another really good uptrend. And ISRG. Those three have been quite bullish within the healthcare. So there are going to be some times where it makes sense to look at the group of stocks within that sector, but there are going to be other times where there are just slight signs that certain stocks are benefiting from a certain environment within that sector and will be better off being stock pickers, right? So when the markets are, or the sector, right? When a particular sector is not showing just overall bullishness, then we want to say, look, let's go be a stock picker and find where the relative performance actually is. All right, gang, that's a wrap. As always, thank you for being here for the Top Tier Outlook. I will see you tomorrow for charts and coffee, and we'll see what we have going on with tech as we go into the first week, the first trading day of the new quarter. What are those strong sectors? XLK, SMH, XLC, Google, Meta, Microsoft, Apple, NVIDIA, Taiwan Semi. How are they going to respond to this new quarter? And is there still buying appetite in those? My bet's on yes. We'll see what happens this week. Be good to each other, gang. I'll talk with you soon.